Come on, Vanna.
Welcome to Thursdays with Harry.
Okay, welcome to Thursdays with Harry. Our next three segments will be on the financial planning, and I wanted to introduce my guest, Randy Levander. Randy is our lead financial coach with the VetAdvisor program. Take it away, Randy.
Today we're going to talk a little bit about life insurance. We're going to talk about the difference between service members group life insurance versus veterans group life insurance versus a little bit of life insurance with your employer and some personally owned life insurance.
Okay, Randy, most of the service members now are 18 to 23-year-old.
Right.
Most of the veterans now are my age, 50
Sure.
plus.
Yeah.
So what can you tell me? What are we looking at here?
Well, as you mentioned, Harry, the 18 to 24-year-olds, obviously, they're going to be eligible for service members group life insurance while they're serving. And I'll tell you, when it comes to comparing service members group life insurance to what's available in the civilian market, it's a great buy. You really can't beat it. With the service members group life insurance, you can get up to $400,000 in life insurance coverage at a really low premium. And there's a lot of life insurance companies out there that won't even insure people that are serving in the military because they may present a higher risk. So my recommendation to anyone, in the 18 to 24 bracket or anyone that's currently serving is that you really take advantage of that service members group life insurance.
Okay, for now, us veterans, isn't there a veterans group life insurance also?
There absolutely is, yeah. There's veterans group life insurance, and basically what you can do is you can carry over your service members group life insurance, transition that over to veterans group life insurance once you've separated or discharged, retired from the military.
But now I heard there's a time limit on that.
Yeah, there is. Once you are discharged from the military, you have 1 year and 120 days to convert from the service members group life insurance over to the veterans group life insurance. Now, the first 120 days is the best time to make that conversion because there's no proof of insurability. You don't have to go through any medical exams or medical questions. But if you wait until after that first 120 days to make the conversion, you still have another year where you can convert your SGLI to VGLI, but you may have to answer some health questions.
Okay, suppose I wasn't interested in either one of them, but wanted to go into civilian insurance. What kind of guidelines can you offer me on that?
Well, with the personal life insurance, so there's kind of a difference there between group life insurance that you may get through your employer and personally owned life insurance. A lot of companies nowadays are going to offer the group life insurance through your employer. I'd really recommend that you take advantage of it, but don't make that your key life insurance plan. Take advantage of purchasing some personally owned life insurance as well.
And so, thinking about life insurance, how much should I get?
Well, a lot of financial planners recommend 8 to 10 times your annual income. And I think that's a good place to start, but I like to take it a little bit of a step further. And I use a simple acronym, LIFE, when I'm trying to figure out someone's life insurance need.
What's that stand for?
Well, the L stands for liabilities. And liabilities are basically any money that you owe to anyone else. So, let's say your mortgage, your car payments, any credit cards that you have. If something happened to you, you'd want to make sure that your spouse or significant other wasn't burdened with those. So that's the first thing that you want to incorporate into how much life insurance you have.
Okay, so what's the I stand for?
Okay, the I is for income replacement. If you're bringing an income into the household, then you want to, and something happens to you, you want to make sure that your family can keep the same standard of living. So you want to look at some figures for income replacement. And a tough part of that is the non-working spouse. Even if a non-working spouse isn't bringing a physical income into the home, then that person, they are contributing to the household by picking up the kids and grocery shopping and things of that nature. So you have to incorporate some figures into that as well.
So what's the F stand for?
F stands for final expenses. And a lot of times people just incorporate that as funeral expenses. And, those things can be expensive nowadays. A standard funeral can be at least $10,000. But you also want to incorporate a little bit of a fund there for things like unexpected medical bills that may come prior to a death.
It makes sense.
Yeah.
What's the E stand for?
The E's for education. So if you were planning to, try to put money away to put your kids through college, and something happened to you and you weren't able to do that, then you want to incorporate some of that into your life insurance plan.
And that includes my grandkids.
That includes your grandkids as well. If you were planning to contribute to their education, and if you were to pass away and you weren't able to, you want to incorporate that into your life insurance plan. Not only for your kids or grandkids, it could also be for a surviving spouse. If something happened to you and your spouse wanted to get back into the workforce, he or she may need some education to get back into the workforce, so that can be a fund to do that.
Yeah, sounds good.
Well, if you want to get more information, go to www.myvetadvisor.com.